Hello, everyone, and a warm welcome from all of us here at My Tax Accountant. We're about to get into a topic that, honestly, could put thousands of pounds back into your pocket over time: UK pension tax relief. We'll be looking at the 2025/26 tax year, and whether you're employed, self-employed, or run your own business, getting this right is absolutely crucial for your retirement. So let's dive in.
Right, so let me ask you something straight off the bat. Are you right now turning down free money for your retirement? It sounds a bit dramatic, doesn't it? But for millions of people across the UK, that's exactly what's happening. They're missing out on a government top-up that they are completely entitled to.
So what is this free money I'm talking about? Well, it's called pension tax relief. And to put it really simply, it's the government literally adding cash to your pension pot as a reward for you saving for your own future. Think of it as a tax rebate that goes directly into your retirement fund. It's one of the absolute best perks of pension saving. So how does this actually look in practice? Well, it's quite simple, really. For a basic rate taxpayer, every single time you put £80 of your own money into your pension, the government tops it up to make it 100. That's an instant boost on your money. You pay in 80 quid, but 100 quid lands in your pension. And here's the kicker. If you're a higher rate taxpayer, the deal gets even better. Okay, so here's our plan for the next few minutes. We'll start with how it works for most people, employees. Then we'll cover what you need to do if you're self-employed. After that, we'll look at some really smart strategies for business owners. We'll also flag some common mistakes to avoid, and then we'll wrap it all up with your next steps. Right then, let's get into the most common situation: tax relief for employees. If you get a payslip every month through PAYE, this next bit is for you. Now, how you get your tax relief depends entirely on the type of pension scheme your employer uses, and it is vital you know which one you're in. On your screen, you can see the two main systems. On the left, you've got the net pay method. This one's great. Your employer takes your pension contribution from your salary before they work out your tax. This means you automatically get your full tax relief right away. It's simple. You don't have to do a thing. On the right, though, is relief at source. Here, your contribution is taken after tax. Your pension provider then goes and claims the basic 20% relief back from HMRC for you. But, and this is so important, if you're a higher or additional rate taxpayer, you must claim the rest of the relief yourself. So, how do you check? First, just grab your latest payslip. Does the taxable pay figure go down by the amount you put into your pension? If it does, you're probably in a net pay scheme. If it doesn't, you're likely in relief at source. Also, take a quick look at your tax code. An incorrect one can mess things up. Finally, it's always a good idea to log into your personal tax account on the government website to see what HMRC thinks is going on. Stay with me. This simple check could genuinely save you thousands over your working life. Okay, let me be crystal clear on this because it is the single biggest error we see employees make time and time again. If you earn over that higher rate threshold, that's £50,270, and you're in a relief at source scheme, you are owed more tax relief. Your pension provider only sorts out the first 20%. It is 100% your job to claim the rest, usually through a self-assessment tax return. If you don't, you're just paying too much tax. It's your money sitting with the tax man. So that covers employees. But what if you're your own boss? What if you're a freelancer or a contractor? Well, the process is quite different, and you need to be a bit more proactive. Here is the absolute #1 thing you need to remember. If you're self-employed, the tax relief on your personal pension contributions is not automatic. You have to actively go and claim it. And the way you do that is by declaring your contributions on your annual self-assessment tax return. Doing this lowers your total taxable income, which in turn lowers your final tax bill for the year. Let's make this real. Meet Sarah, a freelance consultant based in Manchester. Sarah was doing the right thing, paying 10 grand a year into her pension. Her provider claimed the basic 20% relief automatically. But Sarah is a higher rate taxpayer, so she was entitled to 40% relief. By simply putting her pension contributions on her tax return, she claimed back an extra £2,000 from HMRC. That's £2,000 back in her bank account just for filling in one extra box on a form. It's a no-brainer. Okay, now let's level up. For all you company directors and business owners out there, listen up. A pension isn't just a retirement fund for you. It's one of the most tax-efficient ways you have to get profits out of your business. This is a real game changer. When your limited company pays directly into your pension, it's usually classed as an allowable business expense. So what does that mean? Well, it reduces your company's profit, which means you pay less corporation tax. Simple. On top of that, unlike taking a salary, there's no employees or employers' national insurance to pay. That's a huge saving right there. It makes it an incredibly smart way to move money from the company's account into your personal wealth. Now, there is one little rule from HMRC you have to be aware of. For the contribution to count as a business expense, it has to be wholly and exclusively for the business. In normal English, that just means your total pay package, your salary plus your pension, needs to be reasonable for the work that you do. For most company directors, this is never an issue, but it's an important box to tick. Okay, we've covered the basics for everyone. But hang on, that's not all. Now we get to the sneaky traps and common pitfalls that can catch you out if you're not paying attention. First up, it actually matters where in the UK you live. England, Northern Ireland, and Wales all use the same income tax system. But Scotland does its own thing. It has more tax bands with different rates, like 42% and 48%. Since your pension relief is linked directly to your tax rate, if you're a Scottish taxpayer, you need to be extra careful that you're claiming exactly the right amount. Now here's a brilliant tip for parents. If your income goes over 50 grand, you start losing your child benefit through a tax charge. But here's the clever part. Making pension contributions reduces your official income for this test. So by strategically paying more into your pension, you could bring your income back below the threshold and get to keep your full child benefit. It's an amazing double win. Right, let's cover 3 more quick-fire pitfalls. First, emergency tax codes. Start a new job and you can be put on one of these, which can mess up your relief until it's sorted. Second, the annual allowance. You can't just put unlimited money into a pension tax-free each year. The limit is usually £60,000, and you'll face a tax charge if you go over. And finally, something called fiscal drag. It's a bit of a sneaky one. Tax thresholds aren't rising with inflation, meaning regular pay rises are quietly pushing more and more of us into higher tax brackets. This makes getting your relief correct more important than ever. Phew, we've covered a lot of ground there. So the big question is, what are the practical next steps? How do you take all this knowledge and turn it into real savings and a healthier pension pot? Let's bring it all together. Okay, let's quickly recap the absolute must-knows. First, pension tax relief is basically a government bonus. It's free money for saving. Second, how you get it is totally different depending on how you work. Third, and I can't say this enough, if you're a higher rate taxpayer, you often need to take action yourself to get you full entitlement. Fourth, get into the habit of checking your payslips and your online HMRC account. And finally, don't forget that pensions can have other great benefits, like helping you keep your child benefit. So, I want to leave you with this thought. After everything we've talked about, are you 100% confident that your pension tax relief is correct? Are you sure you're not one of the thousands leaving money on the table? And what if, with just a few small tweaks, you could be saving significantly more for your future? Getting this right can make a massive difference. But tax can be complex and everybody's situation is unique. If you're feeling at all unsure, or you just want a professional pair of eyes to make sure you're not missing out, the best thing you can do is get some expert advice. The team here at My Tax Accountant are ready to help. You can reach them on WhatsApp or give them a call on 07854-255-375, or you can drop them an email at info@mytaxaccountant.co.uk. I really hope you found that breakdown useful. For more clear, practical guidance on tax and finance for My Tax Accountant, please do take a moment to subscribe to the channel. Thanks so much for joining us.